Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in these insane markets. Welcome to video webinar 5 on how to become a proficient day trader. For those of you that have not seen the other videos, I implore you please go back to the playlist and start from the beginning so you know exactly what we're talking about. It's always there for you guys to, to check out and take some ideas from and make your own. You know, the whole idea of this webinar series for myself was to try to give some pertinent information from a bank trader's perspective on like how I would train my junior traders. Because remember, not everybody's born a trader. Actually, nobody's born a trader. You need to learn the basics. You need to learn the foundations. And then you need to apply those foundations that suit your personality in order to become successful in the marketplace. So, you know, when people first came out of university, they had to be taught, and I found it amazing that I had a mathematician that had to be taught how to keep an average, a weighted average. He had a hard time with that. I mean, the guy had a master's degree in mathematics. Finally, of course, he picked it up because, oh, okay, now I understand. They needed to learn how to calculate cross trades. They need to learn how to leg into a cross, leg out of a cross, why you would want to do it, how you're trying to get into an advantageous position in the marketplace by using the cross. And as you know, on my channel, primarily, I only trade crosses because that was my specialty. And that is basically, you know, what I've done for years, and I like crosses. You know, it's a natural hedge to things because you're taking the dollar out of the equation. But okay, so what are we going to handle today in this video? Well, in this video, we're going to be going over what's known as market structure, and it's a very important video. And I'll go look on the charts and we'll talk about market structure, and then tomorrow's video we're going to go one step further. We're going to go into like trend dynamics, and it sounds really complicated, but it's not. It's based on a close of a bar to basically determine like where you put a fence around the marketplace. Again, in the shorter time frame, you could do it on the dailies as well. And we're going to cover that tomorrow. So let's start today's video, and let's talk about market dynamics. So in market dynamics, hang on here. Actually, not so much market dynamics, but market structure that leads into market dynamics. So again, because I don't take notes, you know, I misspeak all the time. My mind is so full of so much trading stuff that sometimes I allude to different things that are not right. So anyway, market structure. So we're talking about market structure here, and we need to know what a definition of a trend is. And the definition of a downward trend, I should actually put that in here, a downward trend or a bearish trend, is when the market actually signals making a lower high than the previous high. Then it needs to make a lower low. Then it's got to break that lower low. Now, if it takes that lower low out, we have the beginning definition of a bearish trend. Now, there's one arch nemesis to this whole thing, and it's called an ABCD correction, and we're going to go over that. It happens, you know, and of course, in technical analysis, you know, it's wrought with contradictions. You know, you're supposed to always be trading a trend, but then they're telling you to sell tops, to sell double tops. You're always supposed to be trading the trend. They tell you buy double bottoms. You know, and if the market's going low, it's actually in a downtrend. But here's the thing. If you're trading a 1 hour chart and we're having a downward leg on a 1 hour chart, you need to look at need to look at the daily charts to see exactly where the points are. And if you're trading a daily chart, you need to look at the weeklies. So even though we're getting a downward indication in the hourly, 30-minute, 15-minute, we have to understand that that's not in the bigger trend. It needs to be in the bigger trend to actually be a major trend change. Now, I'm going to cover, maybe I'll cover it in today's video, but I'll cover basically how you could project price. Yeah, I'll do that today. So we're going to talk about the market structure itself. So I just gave you the definition of a downward or a bearish trend. So, and we're going to go to the charts. I'm going to show you some pictures. Like here's an example. You got a low, you got a high, you got a lower low, you got a lower high. This is the point right here. Okay, that if this low breaks, this marketplace is, you know, going down. Like say here we got 1, okay, 2, 3, right? And then that point right there is that level right here is the important point for the market price. If it breaks, it's showing lower. Now, notice it comes back up, but now what is it doing? It's basically making a low. It's counter trending, coming back down, counter trending up to the resistance line, counter trending, going down again, legging down, counter trending, legging down, going back up, counter trending, down, up. Okay, so the marketplace was in that movement. It was in, you know, up, down, up, down, up, down, up, down, up, down, up, down, right? So it had a rhythm to it. It actually does. The market does have a rhythm. And that's really sad for me because I've been trying to play rhythm guitar for 40 years and I stink. So we're going to be going over this. We're going to look for this in the chart in a second. And then, of course, the definition of a trend change to bullish. Well, first it needs to make a higher high. Then it must make a higher low. And then it's got to surpass the highest high. And then we have the definition of a bullish marketplace. And we're going to look for those. And then we got the nemesis of the ABC correction. But if you understand the ABC correction, and even if you got caught, you can potentially make back all your money and more with an ABCD correction. All right, so let's get on over to the charts and let's check it out. Let's start with the bearish market, and we'll use 1 hour. Hang on one second. All right, what's going on here? Why won't it let me get 1 hour? Hang on. Alrighty. Okay, so we're looking at this 1 hour chart, British pound, Japanese yen. It doesn't really matter what day it is. You should actually have had your points marked for your dailies, but this is just for an example for showing, you know, the structure, the market structure. Okay, so we have a recent like higher high right here. Okay, and or we have a high. Okay, and then the marketplace makes a low. It basically does a double top. You could use this as a double top as well. It doesn't have to be slightly. It's a double top is fine. Okay, and the marketplace breaks down. The structure breaks down and creates this low. Okay, so we got a high, we got a low, we got a slightly lower high. We definitely have a deeper low. This is the point right here. Is the point where we need to be looking for the marketplace. This point has to go in order for the marketplace to signal downward movement. Okay. Now, here's the thing. If you have the 3 steps book on page 8 of the 3 steps book, we talk about how a bar before the active bar attempts a breakout. Now you got to go through the formula. If I take this line right here, did this bar have a gap and open below this low? No, it didn't. So criteria 1's not met. This bar, this 1 hour bar, was a down close, but if I take the close from the high, subtract it from the close, is it greater than this breakout price? Yes. So therefore, this should be a good break according to the 3 steps book. All right. So now this is a quick way of determining market structure. So let's do it again. All right. Just for the heck of it, we got a high, we got a low, we got slightly lower high or equal. Okay. Then we get a new low right there. Okay. Market retraces, definitely a lower high. This point becomes the point of the trend change right there. That's the point, that pivot low. Market breaks that, it's going lower. And then that was a fantastic move for that day. All right. So there's market structure. for a market turning bearish. Now, since this is a 1 hour chart, this isn't the flavor of the market. You need to look at the dailies, and you could do the same thing on the daily charts that you're doing right here. So let's go find another one. All right. So hang on. Now, just working off of this chart, okay, when we had that break that was down here, okay? So now we got a high, we got a low, we got a lower high, we have a higher low. In order for this marketplace to confirm it was going lower, it needed to get through 188.28. So when you have the structure in your mind, you basically have an idea of what the marketplace needs to be doing in order to show weakness again. Now, without that piece of knowledge, when it's trading in here, you have absolutely no idea what's going on. You're just taking stabs out of it. Oh, it looks like it's going up. I'm going to buy it. Next thing you know, it retraces down. You go, oh my gosh, it's going to probably go down to that low. I'm going to sell it. And the marketplace does one of those numbers on you again. So let's go I'm going to try to find another bearish break so we can have two of those. And then we can have two upward movements. And then we can look at an A, B, C, D correction. Okay, and hang on one second. Okay, so this is a wonderful one right here. We got a high, we got a low. Now this is also on the same 1 hour bar. We have basically a reversal. It's not a key reversal, it's a reversal upwards, and it makes a lower high. So we got, where's my little numbers here? We got a high, we got a low, we got a high on the same bar, which is fine. Now, guess what? This low is the critical price low that it needs to break. Now, also, you notice that the bar before this was a down close. You would take the difference between, and this is all in the 3 Steps book. So head on over to Park Avenue Trading and get yourself a free ebook, okay? You got your formula checklist, like right there. It's a great little book. I mean, I think that if you have this and you're doing the videos, you could actually test the theory out of that book. So we got the high, the low, the lower high, and then the break. Break point right there. This low is the break point, right? And look at that marketplace. So definitely this thing is in a downward trend. So by you applying this as a new trader, or you're just getting introduced to this stuff, these are the basics, and they need to be understood. Now, you can go to Williams McGee and buy the Bible. I forget what the heck's the name of that book. Stock Trading or something. I mean, it's a classic book for technical analysis. And it goes over these things. It's basically really Dow theory, right? So let's go find the opposite one, okay? And hang on one second. Okay, so definition of a trend change, bullish, right? The market's got to make a high. It's got to make a higher high than the last high. Then it has to make a higher low. And then it has to surpass the highest I. That should be high, okay? If it takes out that previous high, it's signaling it's a bullish move. Very simple, right? It's the exact opposite of what we said about a bearish market. So it's the exact opposite. So hang on, let's go find those. Now, what I think is interesting, this was that downward movement in sterling yen. And we make this low at 180.10. 180.10. I mean, from 208.12 or something like that. This movement collapsed down. Very, very strong bearish market. And it probably took participants a little while. If you didn't know what was going on here, as a market trader, you would still be trading yesterday's game. If you were trading yesterday's game, you got your head handed to you, right? Because sterling yen from 180.10 to quote Breaking Bad, I love this quote, was kicking harder than a mule with its balls duct taped. So if you were selling this stuff, you know, just because that's what it was doing, and you were frozen to sell it before. In other words, psychologically, you couldn't because you thought it was too low. And here's a Gann point, which was, you know, like I said, I'm not a big Gann fan, but he had some really good pointers. He said, you know, a market's never too low to sell it, and it's never too high to buy it, especially if the marketplace is in a bearish condition. Doesn't matter what the price is. You want to sell it, you sell it. If it's an upward, if it's in a bullish position, you don't really care where you know, of course you care. You want to pinpoint your prices. But the point that he was trying to make was that don't be foolish and not try to get inside the game when the game is playing. You know, like you want to get in the game, you know? So that's an important point. Let me light up a cigar because it's that time, and we'll come back onto this. Okay, so continuing with this. This is a great cigar, by the way. Really great cigar. AJ Fernandez, New World Gordos. If you want to send your favorite chief dealer a box, I have no problem with that. But anyway, okay, so marketplace makes a low. It comes back, it makes a high. Here it is. The first indication. So makes a low, makes a high, makes a higher low. This is a 1 hour chart, okay? Now, on your dailies, it's going to be a lot wider than this. So you would need to go back to the weeklies to try to find a low that was very close to this, so you can get a better accuracy, or even a daily. You can go back in dailies in the past and try to find the last time this price was here and see how the market reacted. All right? Now, so the marketplace basically gives a signal. Now, we don't know this is turning up at this point. I'm not saying, oh, this was the point that, you know, you should have got long and, you know, rode it all the way up to 192, which is standing at today, 190, 170. No, I'm not saying that. I'm saying that was the first clue for you to like take a step back and look, like, what's going on here? All right, the marketplace, the appetite has changed. The market structure has just changed. Now, if the marketplace was going to continue down, it would have broke through this low again. That's what, you know, that's what we were talking about before. Okay, that would basically be following, you know, low, high, lower, low, boom, down movement. Except if it's an ABC correction. That's the killer. And that one I'll try to find. You know, we're getting 17 minutes into this. I may save that ABC correction for tomorrow's video along with market dynamics. I probably will do that because you guys get real bored and you shut my videos off, which is really pisses me off. I mean, if you really want to learn this stuff, you got to sit down and watch the videos. Also, you know, you got to get yourself that free ebook, and also make sure you share the videos far and wide. I want to build a big trading community. Okay, I'm done. So there was our first indication of potential trend change. So here we go. Let's do this again. We got a low. We got a high. We got a higher low. We have a higher high. Okay, we got a higher high now. So let's start over again. Why is it going 8? I don't want 8. I want like 1. Here, I gotta click out of it. So we got still saying 8. There we go. We got the low, we got the high, we got the higher low, we got a higher high, we got a higher low. Boom, right there, higher high. That is basically saying a market basically is now upward movement. Now, well, Tom, wait a second. This thing came back down and then took off. Yeah, absolutely. I'm not going to dispute that. But the market told you in no uncertain terms, I am no longer going down. I am going up, and be a fool if you want to sell me. Now, you could have sold up here, you know, okay, I sell up here, and guess what? The marketplace comes back down here. Not a bad trade at all. It's 300 points. Fantastic. But if you want to be on the side of the main trend, you'd be wanting to buy this. So what's a technique you could use? What's a technique you could use? All right, so now in Forex Confidant and in Tower Price, I go over this type of stuff. So this is, something that you get right out of those books. But let's say, for instance, we're looking at this high right here, okay? This one right there. What you would do is you would go to the left to find the last time I traded higher, and you'd find in here. And what's the lowest point in between this one and this one? Well, it's this one. All right? So then what you'd want to do is you'd want to take the price of this high, which is, I can't, with this damn thing, I really can't do it. Let me shut this off. Wait. Right here, 186.95, right? I got to get the calculator out for this. I wasn't expecting that, but okay. So we got the high at 187. When we went to the left, we found that this low right here, 180.10 was the low. So 187 in, 180.10 out. That's 609 points, okay? So if we take 6.9 and we multiply by 0.618, we're going to come up with 426 points off of this high. That's the 618. Now you could go 0.382. I'm just taking a stab to see how close I can get. So 187 in, 4.26 out, 182.74. Where's 182? Oh, shit. 182.74. Right there. There was a price projection down after you confirmed the trend was up to try to get involved in this thing. I don't know anybody that can fucking do that. And I just showed you how to do it. And if you want to learn more, you go get Forex Confidant, you go get Tower Price. So that's how you make price projection. And the opposite would be for the upward movement. For you got a downward trend and you got the spike up, you would do the opposite to get. Now, here's the thing. Does this work 100% of the time? Absolutely not. Market could turn down from here. We could do the AB equals CD correction downward, where it takes all this back out and goes back down lower. Yeah, of course. Markets are markets. So I'm going to leave you with that lesson today on market structure. Please, if you have any ideas or what you've been taught, put them in the comments below. Please like and subscribe, share the videos far and wide. And I'll see you on the next installment of the webinar, How to Become a Profitable Day Trader, taught to you by a 30-year Forex veteran. International banking. Yeah, the price predictor. Tom Alongi. And remember, always enjoy the party, but dance near the door. Cheers.